Immaculate disinflation, you heard it here first. So, in light of the two cases you've laid out, how does Stonebriar make its base case, and do you think a crash is imminent?
That's a great point, Jillian. And I want clients of Stonebriar and other investors listening out there to also agree that this time very well may not be different. Investors have got burned with that belief in the past. And although today I think the jury is still out, I think the next 6 to 12 months, there's certainly room for this rally to continue. But to think that this time is simply different may very well leave investors in a very vulnerable position. As far as a crash goes, I think the next 5% in this market could very well be a continuation of the rally we've seen. But if there are any hints of a slowdown or a recession, a slowdown of corporate earnings, a slowdown of the US consumer, it's very much so on the table. That being said, there will be new investment opportunities that present themselves in these types of scenarios. We've already seen fixed income become extremely attractive. We've seen run-ups in gold. Oil has been volatile, but it's trading near some of its highs. So there's never say never when it comes to what opportunities exist. And that's why working with your advisor and finding a suitable portfolio, is all that the more important. And historically, we've gotten out of recessions the majority of the time with positive results. And I know I talked about that last time on Asset TV, and this still holds true today.
One of the most interesting facets of the current market environment is that we've seen somewhat tepid numbers, and yet the market continues to rally off the back of them. Is this really the case that bad news is good news?
I want to make it very clear to those at home that bad news will not be good news for this market in the medium term or long term. There is a little evidence now when we see a soft data point that what the Fed is trying to do, which is slow down the economy, when we see a soft data point, it shows that it's working. There is some proof, and the Fed will be able to kind of back off its hawkish position. So in the short run, one might say on a daily, weekly basis, some bad news to show some signs of slowdown is a good thing. But if the rest of the economy continues across the board to slow down and it spells a recession and earnings fall, most importantly in earning valuations and projections, that will not be a good thing for investors or for the economy. So good news truly does not equal bad news in the long run here at all.
What do investors need to know as they're standing at this fork in the road? We've outlined such a complicated picture. What are the high-level points that they should take home with them?
Even if we had a crystal ball, 22 out of the last 30 recessions since 1871 yielded positive results, and the average was 16%. If you stay invested 6 months before and 6 months after, that is the math that we experience. So you're not going to beat, cash does not beat stocks in the short term or in the long run. And by staying invested, staying diversified, staying on track, knowing what the facts are, speaking to your advisor, what the data points are that you need to concentrate on, that's going to help weather any potential storm. But for the time being, it's been a nice rally, and we've seen some great green arrows, even coming off the August kind of volatile August, where September looks like it's starting on a bright note too. It's been a strong year-to-date rally. We're still off the highs for the last 20 plus months. So there is certainly the potential for us to get back to where we were in 2021.
Well, speaking of a bright note, I understand that there's an anniversary happening today, so I'd love to hear on a more personal note, what does it mean for you and the clients of Stonebriar to be standing on the floor of the New York Stock Exchange on today of all days?
Sure. So I know you're referring to the 2-year anniversary since Stonebriar was launched. It brings me back to my first job in finance. Just a few weeks onto the job, I was able to take a tour of the New York Stock Exchange. I was actually at a little office just around the corner in front of the Charging Bull statue. And I just remember thinking, this is the epicenter of the financial universe right here on this very floor. And it's just mind-boggling to think the history of the stock exchange goes back over 150 years before the Declaration of Independence. And today being the 2-year anniversary of Stonebriar's founding, if I can draw any allegory, it's that standing here at the foundation of capital markets, Stonebriar was founded on and established on the idea that we would be a foundation for our clients so that they can be successful elsewhere in their lives. So it's really an amazing milestone to be here with you today, Jillian.
Well, thanks for taking the time to market with Asset TV and our viewers. Congratulations. And we appreciate you noting the history of the stock exchange while helping us think about the market's future.
Absolutely. It's been a pleasure. Thanks so much.
And thank you for tuning in from the floor of the New York Stock Exchange. Once again, I'm Jillian Kemmerer for Asset TV.
Stonebriar Wealth Management, advisors for your life.
This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process described herein will be profitable. Investors may lose all of their investments. Past performance is not indicative of current or future performance. This is not a guarantee.